Hi, everybody. Welcome to the special BK Sunday webinar for Boomer Bootcamp. This is a webinar designed for everybody who's a newbie or a BK member that is not quite familiar or doesn't quite understand all the mechanics, all the nuances of the Boomer strategy, which is our bread and butter day trading strategy that we trade in BK every single day with the intent of really trading this at least between 4 to 8 times a day. I'm going to show you a couple of variations of the strategy and show you the strategy that I trade myself. I caution everybody ahead of time that the way I trade the strategy does not necessarily have to be the way that you trade the strategy. It is simply my own personal style, my own personal personality stamped on the idea. But the strategy is flexible. The EA is extraordinarily flexible, and there's 100 different variations of how you could possibly approach it. But I do want to focus you on the way that I'm trading it, just so that you have an idea of exactly what the day-to-day day trading ideas that come out of the Boomer EA are. So first and foremost, let's understand what the whole idea of the day trading philosophy in BK is. We trade always on the opposite side of trend for day trading purposes. What that means is when prices are rising, we're always trying to sell the top. When prices are falling, we're always trying to buy the bottom. Now, the top and the bottom are not absolute, meaning that prices could fall another couple of hundred points during the day. But what we are trying to do is buy temporary tops, sell temporary bottoms. That's extremely important because that's effectively how market makers and how dealers in the FX market trade. The reason why we do this on a day trading basis is because we essentially trade very much on the side of the market makers. That may seem counterintuitive, that may seem very, very bizarre to how you're taught how to trade, but it is the way the real market operates, because what we're effectively doing every single day is trying to provide temporary liquidity. We're basically looking for temporary points when the buyers or the sellers are in a moment of panic, because typically when they're in a moment of panic, they're always doing something at the worst possible time for that particular moment, meaning that the buyers are always going to be buying the top for that particular time, and then the price is going to come back and retrace. And it's that small comeback and retrace that is our bread and butter trade. We're always looking to just simply nick the top, nick the bottom, make a small amount of money, get out, and do it over and over and over again. And that's basically the underlying strategy of how Boomer works. Boomer is derivative for the Australian slang for boomerang, meaning prices come back. The underlying assumption is that the price is going to rise and then come back. The price is going to fall and come back. It's always based on the idea that we're always going to come back to its original point of travel, or at least closer to its original point of travel, giving us the opportunity for profit, right? So let me pull up a chart here and just sort of show you. Hang on, let me just. Okay, we'll minimize. Oops. Okay, we'll minimize my screen, and let's look at the charts, because I want to show you visually how the Boomer strategy sort of operates on a day-to-day basis. So let's make a nice big chart. We'll start with the euro dollar, and we'll go to like a 5-minute chart. 5 minutes for 5 days to give us sort of a longer term point of view. So we continue to trend lower over here. It's kind of interesting. So watching the results here. Sorry for my Facebook pops. There are many variations on how Boomer is traded, and there are many sort of variants that we experimented with until we settled on this final version. I'm going to just go through a short history of some of the variants that we traded with, so you can understand why and how we got where we got. 2, the original Boomer Classic that we traded was basically based upon the following idea. And all of it essentially sort of revolves around the idea of the OO levels, right? So the original strategy that we implemented was something called the Boomer Classic with a 15 offset. And basically what it meant is the following. If the price was falling, and in this case, the price is falling all the way down towards the OO level, down, from the highs down, down to this is from 106.80. Basically, if the price fell from the 50 level, which was the halfway mark between the penny mark, right, all the way down to the 0 level, right, we would become buyers at plus or at minus 15. So we would be always buying, willing, as I said, willing to buy the bottom or try to sell the top. So in this particular case, the price is dropping. We're always buying. If the price was rising, we'd be selling. We would be buying at 85. And our original strategy in Boomer Classic was the following. Let me just sort of go through this with you. We would buy 1 unit at 85, at XX85. We would then buy another unit at XX75, 10 points below. This assumes that the price doesn't rally, just continues to keep falling down. Let me give you 2 scenarios. First, we buy at 85, and if the price went to 95, we took profit, made 10 points, right? Plus 10, right? Then, if the price didn't go up to 85, if it just continued to fall, we'd buy a second batch, same 1 more unit at 75, right? And with TP now at 85, again, taking a plus 10 profit. So we would be long 85, long 75, price comes back up to 85. The 85 batch is 0, no profit. The 75 batch is 10 profit. It would make 10 profit, right? Let me just sort of stop here. Make sure you guys understand the basic underlying inventory management structures. Everybody clear? Somebody give me a yes in the room to make sure everybody understands, especially the newbies, understands the structure, right? So then, if things got even worse, we would buy 65. But in this case, we would buy 2 times 65, right? And then we would TP at 75 for 10. So what would be the end result? If we TP at 75, we'd make 20 points on the 65 to 75, would make 0 points on the 75s, and we would lose 10 points on the 85s, right? On the 85s, right? So overall, we would still make 10 points, right? And then ultimately, if the price just never rallied and it hit the 50 level, we would stop ourselves out, right? And the total stop on the position would be 85 minus 50. That would be minus 35, right? Minus 25 on the 75s, and then minus 30 on the 65s, right? Just want to make sure everybody's really clear on the math here. It's 35, 25, 30s. Altogether, we lost minus, what is that, 90? Am I right? 35 plus 25 plus 30 is minus 90, right? Okay. So the overall structure was max win 10, max loss 90, right? So that sounded insane, and for most people it was insane. It actually is a not a pretty, but a very profitable strategy, as long as, and this is the critical thing, as long as you are not doing this in front of news. The whole idea of the strategy is that it was very unlikely that the prices would drop from 50 all the way down to another 50 points without it retracing at least 10 points somewhere along the line, unless there was some kind of news and you were dumb enough to ignore the news and keep buying against what could be a big exogenous shock movement, right? This is based upon the idea of normal day-to-day flows. Normal day-to-day flows always have a buy and sell, buy and sell. The prices kind of move up and down in waves, and it's these little waves that we were able to take advantage of. But still, and many people to this day trade this strategy very successfully. But as you can imagine, this strategy requires that you be accurate, like at least 92, 93% out of 100, right? Now we've had people who've made this strategy who've been accurate literally 99 trades out of 100, just maybe one trade out of 100 where the strategy failed. But still, it's a big risk reward skew, right? So for a couple of reasons, we thought we would modify this strategy, make it less less dangerous for most people to trade. The thing about the strategy that works very well is that it works for somebody who is willing to absorb an occasional risk, who's willing to absorb an occasional large loss, and is generally calm about losing 6, 7, 10 trades in one single trade. For a lot of people, psychologically, that's a very, very tough barrier to overcome, right? So instead, we created something called the boomer stall strategy. Now, before I go on, I have to tell you that all of these strategies are only applicable, and I only trade these on just the majors, on the euro dollar, on dollar yen, right? On pound dollar, on Aussie dollar. Oops. This was all applicable to this. And even within this range of what's happening to my thing? I don't know why I can't move it. Okay. Wow, what's going on? Something is wrong with my cursor here. Let me see if I can do something new here. So euro dollar. Okay, sorry guys, I'm just having a problem with my cursor here. Dollar yen, pound dollar. Those are sort of the trinity. Then Aussie dollar and Kiwi dollar, right? And dollar CAD was always a wild card because it's so volatile because of oil. Remember, dollar CAD, we say we don't trade it because of news, but because news equals oil prices, and oil prices were completely unpredictable, right? We made dollar CAD kind of a question mark for quite a long time. And in fact, dollar CAD remains to be a question mark, right? But that's basically the core set that we traded this. Now, a lot of people are going to ask me, can you trade euro yen? Can you trade pound CAD? Can you trade all those things? You can do whatever you want. But the reason why we traded these particular pairs is because they had the highest probability and the tightest spreads. You need two things in order to make this strategy successful. You need the absolute tightest possible spreads in order to make these strategies work on a short-term basis, and you need a non-news-driven flow. And if you're trading across, remember when you're trading something like euro yen, you're not only trading the euro dollar, you're trading the dollar yen. So therefore, there could be news on one side or the other side of that particular cross that could skew your trade, which is why we stick just to the majors. Just bread and butter, plain. I want everybody who's trading this, who's looking at this for the first time ever, to do nothing but these 5 currency pairs. Only after you've gotten very, very comfortable, only after you've gotten extremely good at making money out of the strategy can you expand your universe if you choose to. But the best way to do this is to do it this way. So now, because the original boomer strategy was extremely risky for new people, we decided to create something called the boomer stall, right? Now, the boomer stall is a kind of a modified version of this boomer strategy, and let me explain to you how that worked. That focused on sort of similar ideas, but, and this is the key thing, it tried to limit the risk factor by making a much smaller loss, by making a much smaller stop loss. And what it did basically is it said, listen, when prices break above the 00 level or they break below the 00 level, right, they tend to very frequently congest in this 30 to 50 corridor, right? This 30 to 50 corridor, right? Okay. Basically, this corridor over here where markets tend to find a pause. In other words, the prices will rise about a third of a penny, and then in front of the half penny, they will tend to congest. And these congestion zones are our opportunities for profit, right? For basically being able to resolve the trade, for a profitable position, right? So what we did is we created the boomer stall strategy, which originally worked on the following premise. The original boomer stall strategy said, okay, we're going to, let me see if there's any questions here. Herwig tells me the no is 54 to 58. That's why we're dropping like a stone. Okay, well, let's, it's good for us. We're short the euro, so it was a big turnout. Generally means, I guess, that the population is. If Matteo Renzi resigns, looks like euro is going to really fall like a stone. So, all right, good for us. But again, let's just focus on the boomer strategy for right now, because I want everybody to understand the mechanics of what we did. So the boomer stall strategy said, okay, what we're going to do is we're going to do a modified version. We're going to sell just twice, not 3 times, just twice. We're going to sell one time at the 40 level. That's going to be our first entry, in the stall level, right? And then we're going to sell 7 points higher at the 47 level, right? So if the price keeps rising against us, we sell 40, we sell 47, and our total stop will be 60. Will be right over here, okay? We'll be at the 60 level. And what we're going to try and do basically is put a take profit on each strategy of 9 points, right? So if we sold the 40, the first take profit would be at 31. If price came down to 31, we resolve to make 9 points, great. If we sell the 40 and then we sell the 47, right, the take profit would be 38 on the short side. So if we're selling the short, if the long structure of it was a little different. So looking at this on the boomer structure, and I'm just going to give you the short version, right? We sell XX40, take profit 31, right? If it goes up, we sell another XX47, take profit 38, right? Stop is at 60, okay? So let's first figure out our stop. We are at, am I giving you guys the wrong? I think I already forgot my stall version. Did we sell at 45? I'm sorry. I think we sold at 45. I gave you the wrong version. Didn't we sell at 45? And stop was 38, right? I'm sorry. I already forgot my own version. So we sell at 40. We sell at 45 with a take profit at 38. Our stop is at 60. What this means is we lose 20 on the 40 lot, we lose 15 on the 45 lot, we're minus 35 on our stop, right? And our take profit is always plus 9, right? So 40 plus 9 is 31. 45 plus 7, the reason why it's 7 is because we pick up 2 extra points on the first position. The first position, 40 minus 38 is plus 2. 45 minus 37 is plus 7. Altogether makes 9. Our TP is 9. Okay? Is that clear? So now suddenly the setup is reduced to only a 35-point stop instead of a 90-point stop with a take profit of 9. We pretty much preserve our take profit, and we've reduced our stop tremendously by almost 2/3. Is that clear to everybody who's in this room, especially the new people? I'm sorry I butchered the numbers, but I want you to understand the structure really, really well. Is that clear to everybody? Okay. Okay. All right. Great. Christian. Okay. Let me ask a better question. Is it not clear to anybody? Is anybody confused? Is anybody confused of the basic mathematics of the boomer stall strategy? Do you want to work it out on a piece of paper yourself, as I do? It's just sort of, so you understand the basic idea. What do you mean what happened to the first trade? Maria, what do you mean by the first trade? The boomer classic? The one where we lose 90 and we make 10? Not clear what you mean. Let's post everybody's questions up here so we can all see it. What happened to the first trade? What do you mean by the first trade? Okay, so I think I understand the confusion. Let me clarify this very, very clearly. Okay, so first we sell the 40, right? So first we sell the 40. If price goes to 31, everything else gets canceled. The 45 offer is canceled automatically by our EA, right? Our strategy automatically cancels it, right? There is nothing else out there. All we want to do is just sell at the first price, close it at take profit, and be done. It only kicks into gear. It only kicks into play if the price just keeps rising. If we sell 40, then it keeps rising, then we sell 45, and then we try to clear the whole deck at the 38 level. Okay? I think that's the confusion. Is that clear to everybody now? Okay. All right. Let's see what David has to say. So, no, David. I'm going through the original strategy. I'm building up to that. I'm giving them the historical how we got there, how we got to where we are now. Okay, so I'm just giving them the historical stuff. Okay, so we're building up to where we're at now. So we have the boomer classic, we have the boomer stall. Now we're coming up to what we are doing. This is how we traded. Now let me just rephrase this. This is how I traded. You are welcome to use any of these ideas. You're welcome to use the original boomer stall, the way this is trading. You're welcome to use the original boomer classic. You can do any of those things, and I will show you how to set up each one of those in your EA, and I'll even save them as templates, and I'll put them up into our shared Dropbox, so you guys can download the templates for each one of these things. But this is the key thing. What we're doing now is even more modified, is even more refined, is even more risk averse than what we were doing with the boomer classic. So basically, the whole history of the boomer trade is minimize, right? So the quintessential trade that we now trade, right, is the following. Instead of using the 40 as our first entry, right, we're actually going to be using the level of 33. The reason why we're going to use the level 33 is because we actually, want to be around 35, right? We believe that 35 is a really good stall area. That around 35, price is going to rise from O, go to 35, and then come back and correct a little bit, right? But we want to be just a little bit early. We want the opportunity, just in case it doesn't get to 35, to get into our trade. So what we're doing now is a version of this strategy that really, really modifies our entries and exits, and it goes the following. So the boomer stall, let's call it Boris because it's really my own version, and it's based upon a couple of things. One, that because I trade this strategy on a trade copier basis, in other words, anybody who is an annual subscriber can literally attach themselves to me and just have all these trades auto-copied into their own account. You don't have to place your own trades. You can just literally have these trades copied off of my account. And I tend to, obviously because of that, be very, very risk averse. But also because I personally have, the news is bad out of Italy. I'm watching this right now. But I personally have very little patience for targets. I like very, very short targets. And I'm much more comfortable with a 5-point take profit target than I am with a 10-point take profit. I want to resolve my trades very quickly. I like just coming in, resolving, then going back to sleep, then waking up, coming in, resolving. My whole idea is to be like a sniper. Come in, kill, boom. Come in, kill, boom. Not wallow around and hang out for a couple of hours in the market while it tries to figure out if it wants to stop me out or give me the take profit. So I like quick take profit resolutions psychologically. So what we've done is we created what's called the Boomer Stall Boris, which works the following. It has a 2-entry structure, and in this case, I'm going to give you the shorts and the longs. So the short structure is we're coming in at 33, right? With a stop at 50. So our stop is minus 17 on the first lot, right? And our take profit is literally only plus 5, right? If it goes to 28, I'm done. I resolve my trade, right? I'm done. Now, if it goes against me, right, I sell the next one up at 42, at plus 9 to the original structure, right? I sell it at 42. Still same thing. Stop is 50. So in this particular situation, I am minus 8 on the second position, right? I'm going to say this, I'm going to lose, right? And my take profit on that, on the 42, is 7, right? All I want for the price now is to come back to 35, not even to my original 33, just to 35. If it comes back to 35, I've made 7 on the second lot, and I lost 2 on the first lot, for again, the take profit is 5, right? I made 5 points, right? So what happens in this particular inventory management structure? Here, we've now gone to max profit 5, but max loss only 25, right? That's a very reasonable loss. I'm not going to lose 100 points when I lose. I'm not even going to lose 30 points when I lose, or 35 points. I'm going to lose 25. If I'm doing 6 to 8 trades a day, and I only lose 1 trade, I'm ahead. Even if I lose 2 trades, it only takes me 1 day to recover my losses. It takes me 5 trades to recover my losses. And because my take profits are so incredibly small, because I'm going for such small take profits, the probability that I'm going to make my take profits is very, very high. Very high. In fact, the target of this whole strategy, this strategy is obviously profitable at 85%, but where we really, in a perfect world, if the trading gods are smiling at me, I should be at 90%. But I would be ecstatic if I could be on a long-term basis after about 100, 200 trades at about 87.5%. If I can achieve that degree of accuracy, then the strategy is working better than even my best expectations. So that's what we're looking for. That's what the strategy operates on. These are all very high probability, but much more limited risk strategies. Now that's the short side. The long side works like this. On the long side, again, what we're looking to do is once it drops through the 00 level, we're looking to buy the 62s, right? Again, take profit here is +5, which means that we're going to take profit at 67. And the next level down is 9 away, which is we're going to buy the 53s. And we're going to stop ourselves, right? We're going to stop ourselves at 45 in this case, okay? We're going to stop ourselves at 45. And what that's going to do is it's the same structure as before. We're going to make 5 points if we're right, 25 points if we're wrong, okay? The reason why we're giving ourselves sort of a little more asymmetrical skew on the downside is because prices tend to test the 50. When they drop faster than they rise. So the 50 may get tested, and then bounce back up, which gives a chance to resolve the trade. Whereas if it's rising and it hits the 50, it's very likely it's going to go past 50. So we just stop ourselves out. Okay. So now let me just kind of stop. Let this structure sink in. Okay. And let everybody who's watching this kind of understand what we're doing. That's the boomer bread and butter Boris strategy. The stop at 62 is 45 for the whole thing. On both lots. So if I am stopping at 45, I am minus 17 on the 62s, and I'm minus 8 on the 53s, which makes the whole thing minus 25. Is that clear, Gina? Is that clear, Gina? Okay. Okay. Who does not understand how this works? You are selling in these stall levels, these levels between 35 and 50 points or between 65 and 50 points to the downside. You're giving yourself not one, but 2 opportunities to average into the trade and resolve the trade. And you're trying to resolve the trade for just 5 points. And your maximum risk in this particular structure is just 25 points. That's the boomer Boris stall. That's what trades in the red account, in the Boris very active day trading account. That's what we try and do between 6 to 8 times every single day. Okay? That's the overall goal, the overall structure of how we are working out. Is that clear to everybody? Because now I want to move on and show you how we can set that up in our EA. Okay? So give me just 1 second. I'm going to pull up the EA. Just bear with me. I'm going to pull up the EA. I'm going to use my own personal one just to show you how we can structure this thing. Okay, so first and foremost, if you know nothing, if you know nothing about MT4, just type in the word MT4 into this box, or ideally into this channel. This is the channel. Really, this is the channel you want to type in all of your Slack words into. Sorry, MT4. Type this in, and you'll get a video guide of how you can attach a basic MT4 EA into your account. This is just basically for newbies. So I'm going to assume at this point, of course, that everybody knows how to attach an MT4 into their own account. And I'm going to use let's use the euro dollar, which is starting to really slide here, and we're going to use our boomer EA. And what I'm going to do is I'm going to show you, starting with the boomer classic, then the boomer stall, and the Boris, and the boomer stall Boris, the 3 ways that you can set up your structure so that you so the EA fully executes to what you want it to do. So first and foremost, let's open this up. And let me just, okay. So here's the Boomer EA, right? And it's a pretty complex EA. It has a lot of functionality. I'm not going to bore you with most of the functionality because obviously we'll have other lessons that show you some other functionalities that it does, including how it trades another one of our strategies called sessions. But for right now, in order for us to understand just the Boomer side of it, let's look at what it has to do. So first of all, the Boomer EA allows you to put in an up price and a down price. Let's suppose the price is at the 0-0 level, and you don't know if it's going to rally and you want to sell, or it's going to fall and you want to buy. So if you let's just for argument's sake, let's assume the euro dollar is I'm not going to be. I was like, we are very close to the Boomer level here. We're very close to the 105.62, but this is a perfect example of when not to do this trade. It may work, but there's no effing way I'm about to buy the euro dollar against a massive piece of very bad news for the Eurozone as it continues to slide lower, okay? Maybe, and it's actually, I see it coming down to the 62 level. Maybe in a couple of hours when things calm down, I'll start to look at potential levels. But this is a perfect example of when you're not supposed to be the fool that just simply buys levels. These levels only work in calm markets that have absorbed all the information. They do not work in volatile markets that are constantly grappling with absorbing the information from the marketplace, because that's exactly when you have huge amount of movement. And the way this strategy fails is if you have very, very fast-paced movement, because then you don't get a chance to repair, it doesn't get a chance to bounce, it doesn't get a chance to retrace, right? So that's the whole key strategy. But the bottom line is we can just for practice purposes put 1.0562. That would be our buy zone, and our 1.0633 would be our sell zone. This would be our numbers. But because I really don't want this thing to be triggering, I'm actually going to make this 1.0462. I'm just going to go 100 points lower. The key thing about this that's very important that you need to understand is that the EA is very, very smart. Once one side of the equation triggers, the other side is going to automatically cancel out. You don't have to worry about managing. The EA manages all of your logic for you. You don't have to worry about it, right? But actually, before I even talk about this, I just realized that what I want to first talk to you about is how to set up a Boomer Classic structure. So if I want to set up a Boomer Classic structure, and let's assume we're going to break the 105 level. So 105, I would be a buyer at 104.85. I would be a seller at 105.15, but in this case, let's just say I'll be a seller at 106.15, right? I'm gonna create a very, very wide range, 105.16, 105.15, right? And just leave it as is like this. Now, remember what I said to you that we have 1 times the first lot and then 2 times the second entry, right? We have X at 85, X at 75, and then when we go to 65. We go 2 times. So we put our lot multiplier to 2 times. Our stop loss is always from the first point of entry. So in this particular case, our first point of entry is 85, and our stop is going to be 50. So our stop loss is always 35, right? That's the original stop loss. That's how we put the stop loss. And our take profit on the first position is 10. Our take profit on the second position it's always 10 in this Boomer Classic structure. It's always 10, right? Okay. And the final 2 things that we need to set up is how many levels are there. There's 3 levels. This is the Boomer Classic structure, and the distance between the levels is 10 points, right? That's how it works, right? For right now, I don't want to go into all of the complicated, all of the nuances, all of the various things that the Boomer EA has. I'll be happy to do this in more advanced Boomer sessions. But for now, that's all you really need to know. This is the Boomer Classic structure, except instead of setting up the prices in order for me to save it as a template, right? As I want to save it as a template, I'm just going to leave these values as 0. I'm just going to set it as a template, right? And if I say this, if I make this template okay, I say okay, you can see that that euros is coming down. I can save this template as boomer.classic. And I'll be happy to upload this template. You could literally copy this template, and the Boomer Classic structure will be there for you. Right now, now you understand why I was not that eager to buy the 62s. Right? Okay. Now the next template that we're going to be working on is the Boomer Stall. Right? The Boomer Stall only has 2 levels to it, so we can just ignore all of the stuff, and it has no multiplication. It has just 1 point, 1 times the size. The stop loss on the Boomer Stall. Remember, we came in at 40 and our stop is 60, or we come in at 60 and our stop is 40. Either way, the point being is our stop loss is always 20 from the initial point. And our take profit, this is where it gets just a little bit nuanced. The take profit on the first position is 9, and take profit on the second position is 7. Remember what we did. We came in at 40 with a plus 9 target, at 45 with a plus 7 target, because at 45 plus 7, we make 7 on the 45 and 2 on the 40. That gives us 9 total, okay? So the second level take profit is set to 7. Again, the EA understands all of this, knows how to manage it. We tell it we want it to go only 2 levels because it's only 2 entries that we're going to have, and the difference between the 2 levels is going to be just 5 points. Just 5 points. So what that tells us is that if you come in at 40, the next entry level is going to be at 45. That's what the EA does, right? Now we say okay, and we can save this one as Boomer Stall. And I'll call it Boomer Stall. Yeah, and we just say Boomer Stall Original. That will give you a good differentiator. Okay. All right. Finally, the last and the one that I'm using is the following structure. I'm sorry, guys. By the way, all of these templates, my fault. I'm going to change them. The templates are set to original size of 5,000 units. I'm going to set them to the smallest possible size, which is 1,000 units. And of course, you guys can change the template to any size you like, but I'll set it to the smallest possible size, which is 1,000 units. I'll do that before I upload them, so that you can to make sure that you're not trading anything beyond the smallest possible size. And then, of course, you yourself, it's like a recipe. You can always add salt. You can't take salt away, right? So therefore, you can add the size, but I don't want to put the size on you. So again, same kind of a thing. Very, very simple structure. 1-1 multiplier, right? Our stop loss from the original entry. This is the key thing, right? We're coming in at 33. Our original stop loss is 50. Is 17, right? That's our stop loss. Now, the first take profit is 5.0, 5. The second take profit is 7.0, right? Remember, we're coming in at 33, and then we're coming in at 42, and then we're targeting just 7 points to make our 5 points. The number of levels is 2, and this is the other difference. Is that the difference between the 2 levels is actually 9. Right? The first entry is at 33. The second entry is going to be at 42. And that makes the whole structure all set up, right? And actually, I don't need to offset this. This is all set up. This is L1 attribute is all set up fine. So that's it. We are completely and totally set up as far as the structure goes. Oh no! I'm sorry. This is I do need this too. I'm sorry because the distance. No, that's fine. I just needed to set this at 9. I'm sorry. That's all fine. I don't need to do any of the offsets and everything else. And so now I've set this up. I can save this, and we can save this as cancel as boomer stall Boris. I'll save that. And I'll upload all of those things, of course, into the Dropbox, and I'll give you the list. Now, let me just sort of see if there's any questions here going on here. Okay. So, is it clear to everybody? Is the setups all clear, and does everybody understand how the MT4 EA is set up in order to be able to manage the logic of the inventory management of each one of these structures? Okay. And of course, you guys can see Eurodollar now slipping to the 49 level, really getting getting pressed hard to the downside. We're certainly we're at 35 bid, I believe, on the big trade. So we'll have to see if that trade comes in. Of course, the 105 level is going to be very, very key. Now, having said this, guys, and this is just for us to think about into the European Open. There's probably going to be, this is negative news. Renzi may not resign. If Renzi does resign, there's probably going to be a second wave of puking. There's quite a high degree of confidence that the 105 level, that's my trade, Victor. It's not Kathy's, but it's fine. I'll let her take the credit for that idea, even though it was my idea. Anyways, I totally lost my train of thought. Oh, if they break the 105s, we probably will be buying the 104.62s, because at that point, the news will already have been stretched. The amount, all of the negative news will already been pretty much priced in to the marketplace, and that will probably be a pretty decent entry for us as a boomer stall entry, because it's going to be much lower risk. But we certainly are not going to fool around with this particular strategy. Now, conversely, if they decide to rally this thing, right, and short squeeze it, unless there is some new, unexpected positive news, if they're going to short squeeze us to above 106, we're certainly going to feel very comfortable selling the 106.33s against this, because that should be a pretty high caliber, high probability trade. This is kind of interesting. I didn't expect to do the webinar against a major news event, but I think it's actually very helpful, because it shows you how it's incredibly important to sidestep the news. We thrive once the news has already been disseminated into the marketplace, and we die if we're stupid enough to fight the news, right? So that is an incredibly important point to how we get our high success rate. Our high success rate is not just dependent on the trade structure of the idea. That's a very big component of it, but it's not 100% the reason. It's maybe 80% of the reason. But the 20% of the reason for why we get a high success rate is this ability to choose when we want to come into these trades and not. And certainly one of the most important components, and when we don't want to come into them, is under a very heavy news flow. That's when we want to step away and step aside. Have I covered everything, David? Am I missing anything? I just want to make sure that I haven't missed any big points that all the new people in the room need to have an idea about. Okay. David is my, like, you know what a spotter is? Like when you're lifting weights and you have some other person who stands behind you to make sure you don't break your neck, or you don't drop the weights on your throat. Well, David is my boomer spotter, because he's so good at trading the strategy that I have him, watch and see, make sure I don't make any mistakes. Ray, I was thinking about you. Ray is back. Hey, Raymond. Boy, I hope you come in and start trading with us on this thing. I absolutely love this particular version of the strategy. You got to come and trade this with me. I'm telling you, you're gonna love this, Ray. This is like everything we've ever done to the ultimate point of risk precision. So I hope you come in and trade this with us. Anyways, any questions from the newbies, guys? As I said, this webinar I'm going to record. I'm going to post this in the room. We're gonna make it a permanent component. We'll make it a keyword, right? A Slack word, so you guys can call it up at any time you want. And I'll put up the templates right up there. And of course, if you just simply go MT4 ? It will explain to you how to attach a template, how to attach a template to your MT4 if you don't know how to do that, and therefore you'll be able to attach the template properly. Okay. All right. The Dropbox, the BK Dropbox is BK Dropbox, right? ? And this is where all the news is. Okay. It really helps if you have a Dropbox account. You don't have to have a Dropbox account, but it really helps because otherwise, it asks you for a password. Like it asks you for all these annoying things. Get a Dropbox account. Here's the thing about being part of BK. There are certain things you really have to have if you want to be part of this trading team to make your life easier. You have to have an MT4 account. You have to have a VPS, a virtual. You have to have the account sitting in a cloud, so it's operating 24 hours a day, and you have to have a Dropbox username for free. All of this can be done for free. None of this is payable. But if you don't have these tools, you're just not really serious about trading with us. And I want everybody to be really serious about trading with us. Okay. Any other questions, guys? Anything else that I can answer for you? Thank you so much. Yeah, just with these lessons, this series of lessons, they're going to be just one thing. This is all about my New Year's resolution of just one thing. So we'll do one on sessions. We'll do one on just navigating the BK room. We'll do all these things, but we'll just do one subject matter at a time so that everybody can just focus on one thing. And today we focused on the bread and butter, the Boomer setup, with a final version, which is the Boomer Boris stall that I'm trading in my red account. I hope you guys all enjoyed it. All right. So I'm going to see you guys Tuesday, right? Bright and early. But of course, I'll see you. Of course, I'll be putting out trades starting Europe, maybe even the Asia Open. We'll have to see. But we'll certainly be, putting out trades as much as I can, given the risk scenarios that we have here. So thank you so much, guys. Thank you for attending. I will video this and Vimeo this in just a few minutes, and I'll send out the links to everything. Okay? Thanks a lot. I'm going to create a special folder called Boomer Templates, and that's where all those templates are going to be. So look for that folder called Boomer Templates. That's where the templates are going to be. Thank you, guys. I will see you all very, very soon in the European session.